Lantheus is a med device. I'm sorry, it's more of a healthcare pharmaceutical company. Well, I'm not sure how to call them because they create a product that people ingest, and then you go in and you get some diagnostic service, right? If you have like a heart condition, you ingest this fluid or active ingredient that these guys produce, and then when they do an MRI or an X-ray, they're able to better see your body, your organs, and they've been growing really nicely, and they have good margins and so forth. They're in the healthcare space, and what I've observed is healthcare started to do a little bit better in 2024, but it really didn't do great in 2023, and it hasn't done great in 2024. I own healthcare. Some of them are doing well. The small companies like Catalyst and United Therapeutics have done well, but the big ones, for me, have done poorly. So it'll be interesting to see where this one falls in kind of evaluation. And if anything, it might be worth watching for me. So let's take a closer look. So I've already updated the free cash flow. What I'm going to do is I'm going to take their trailing 12 months and increase it by 15%. They're growing by about 24%, and they're growing their cash flows very quickly, but I just don't want to get too overly optimistic on that number. So I'll go conservative and grow it at 15%, which is a good growth rate. And I was to a point where I was going to look at their balance sheet and see how much cash versus debt they have. They have cash of $866 million and only $621 million in debt. So that's really good. So they have more cash than debt. It's always a good thing. So update that guy. And then debt is 621.30. The market cap on this company, it is a small cap at 6,190 million. Shares outstanding are 69 million. The stock price is 89.03. So if you look at cash flows in this forecast, I think it's a little bit conservative, but play it safe. And then discounted at 10%, which is a higher discount rate than what, let's say, a Google or a Microsoft would get, because they're smaller. They could, really receive a lot of competition from one of the big players. Let's say one of the big players got into the business and started competing against them. That could be a real big threat. Overall, I think it's a really neat little company. It's a good company, but I'll discount it by 10% since it's a smaller company. Now let's take a look at the earnings per share forecast. Analysts, and I forgot to see how many cover it. 5 analysts cover it. So not a lot of analysts, but I guess I could say 5 plus our friend on Discord, Snoring Insomniac, who had a positive review of the company. They think it's discounted by 46%, those 5 analysts. And so does Snoring Insomniac. So that's great. In next year, I'm going to use next year's number. Earnings per share is expected to be $6.90. It's going to grow by about 4%. And then the growth in future years looks really good. So that looks interesting. So 690. I'm going to keep the 18 PE because it's a growing company. They're growing at 25%, which is very good. And the 15% growth rate might be a little too aggressive there. Bring it down to 10%. I don't like taking numbers that are like this. I consider to be the best case scenario. So I'll go to 10%. Even with that reduction in the growth rate, we get a discount of 53%. So this is a really nicely discounted company at 47%. The thing that also is attractive to me is they're a different type of company, right? I own a couple of pharmaceutical companies like Catalyst Pharma. United Therapeutics does something else. These guys are doing something that pretty much is very commonly used, right? People have a condition, the doctor wants to see ultrasounds and MRIs and X-rays of that person's condition, whatever organ is causing some type of symptoms. So this, I think, is going to be in demand nicely. So I like this company. I like it a lot. When it comes to pharma and healthcare, I have a number of positions. As mentioned, I follow healthcare closely because I just believe in it, but it has not been performing as well as I would have liked. The stock that I'm trying to get rid of is CVS. It's kind of a slow process to do so. The stock's been really going down. Surprising, but that's the case. Catalyst Pharma has been doing really well for me, and so has United Therapeutics. But Pfizer has kind of been a dog as well. I'm going to keep Pfizer, but I'm going to get rid of CVS. I might add that little LNTH company, but it'll be after I get rid of CVS stock. I think that'll be a good adjustment there. Overall, I guess if I measure the 4 stocks there, I have $120,000 invested across those 4 companies, soon to be 3, and I'll get $16,000 off my portfolio. So that is Lantheus Holdings, neat little company. Great job to Snoring Insomniac. I think you picked out a nice stock, and hopefully you make lots of money on it. Go ahead, Nkiter.
What is their competitive advantage?
I can't say that. I think if you read Snoring Insomniac's thesis and you kind of understand the company a little better, that's a very good question. That'll be some homework for me. I'd like to understand that. It's a very good question. I just started looking at the company. So
okay.
I think the numbers look good, but you ask a very important question. Numbers may look good today. Is there a threat tomorrow? Is there some other company that's coming? Especially if you saw, hey, let's say Johnson & Johnson, a big, gigantic company, wants this space and is going to compete against them. That'd be a huge threat because Johnson & Johnson has deep pockets. They're going to try to buy the market. And this little company may not be able to fend off that, a super strong competitor like that. So we will see how that plays out. But for now, I think it's a neat little company to take a look at and track. Over the last year, the company's up 22%, but over the last 5 years, it's just been going gangbusters, up 334. So it's getting it done for shareholders. The PE is nice and low at 14.78. Forward P is 14. Positive growth rate. I mean, they have beautiful growth, 24, 38, 120. This is when they were kind of in startup mode. It looks like their treatment really got a strong hold of the market, and they just really grew in 2022. I think there was some COVID caused a lot of treatments, a lot of healthcare to be postponed because people didn't want. Well, first the hospital didn't want people to come to the hospital for optional, treatment. Like if it's anything that's like not critical, don't come to the hospital. So they said stay away. So they saw their revenue go down, but then you saw a bounce back in 21, and you saw a huge bounce back in 2022. And it's good that they continue to grow off that momentum, up 24%. They're about a $1.5 billion company now. So neat little company.